So what is a DSCR loan? A DSCR loan is a mortgage loan for investors. It's a great opportunity for investors who are looking to expand their portfolio, or if you're a new investor who's just hopping into the game and looking to begin and to start a portfolio. Now, I love talking about this topic because there's a lot of people out there who still don't know about this loan, how it works, how to qualify, and just overall how to utilize it to their own benefit. DSCR stands for debt service coverage ratio, and essentially with this loan, we're looking at the cash flow of the property itself rather than the income of the borrower that's borrowing against the property. So it's important that the rental income covers the monthly mortgage payment. This can be verified through a Title VII rent appraisal or by reviewing an existing lease agreement. But please note that these properties must be non-owner occupied. The interest rates tend to be a little higher as these are considered non-traditional loans. There is also no need for income or job verification. Minimum credit score is about 580, and this is a 30-year loan. Now, the decision on whether you need reserves and how much is based on several determining factors. Reserves are essential as they represent funds you have available to cover the mortgage payments in scenarios where a tenant may not be paying rent or if the property is temporarily unoccupied. Now, the differences from these loans and conventional loans, those of you who have been into residential real estate investing know that typically for conventional loans, you have to use your own personal income to help you qualify for an investment property financing. But with the DSCR loan, that is not the case as we are looking at the cash flow of the property itself. Now, the most important thing to remember when you're doing a DSCR loan, and I'm going to say this with any investment property, but in particular a DSCR loan, the more cash flow the property has, the more attractive it is for an investor. So if you're really cash flowing on a property, this is probably a loan that you'll be able to get. Now, if you're marginal or if you're just under cash flowing, you can still do them, but it's not going to be in as favorable terms as you're probably hoping for. So just keep that in mind as well. Now, typically loan amounts can go anywhere from $100,000 all the way up to $3 million. These are obviously for investment properties only. So you can't do this on a primary residence, like I said earlier, or even a second home. It has to be a property that you are not occupying as either a primary residence or a secondary residence. Now, when it comes to down payment and LTV, loan to value, this can typically go up to 80% LTV, which means a minimum of 20% down, or you need to retain at least 20% equity if you're going to do a cash out refinance on this particular property. So a 20% down is pretty standard. Now, interest only, there is an option in some instances to do interest only loans on these if you have a really good credit profile, meaning you have a lot of money left over in reserves and an excellent credit score. You probably can qualify for an interest-only option. The rate ends up being a little higher, but sometimes your monthly payments is going to be a little lower with an interest-only option. So please mention this to your lender and ask for both scenarios as well, so you can pick and choose. Now, for first-time investors, you are okay, don't worry. But sometimes some lenders, depending on the lender, will want you to own your own primary residence, as others do not care. Now, for the properties that are available for a DSCR loan, is a single-family unit, 2 to 4 unit condos, townhomes, condotels, and any non-mortgageable condos as well. If you guys have any questions, you guys like this video and this information, please give me a like, a comment, share this with somebody else, and I look forward to helping you guys out. If you guys have any questions, I would love to assist you guys.